Investors and traders, welcome to the channel. Market chart pattern is 6th of January 2025. Hope everyone is having a great day. We will be taking a look at the key US markets for this video. We'll start by taking a look at the dollar index, then we'll take a look at the bond markets, shorter end of the curve, 2-year treasury note, then we'll take a look at the 10-year treasury note yields, then the futures market, 10-year treasury note futures, and then the long bond futures. We'll also briefly cover gold and also silver. Then we'll take a deeper dive into the US equity markets and how they perform today. As always, this video is for educational purposes only and it is not a financial advice. We are looking at the weekly chart of the dollar index, and this is the region that we were waiting for this market to get into, and we think this is going to be a pretty strong resistance. Technical reason is the 61.8% Fibonacci retracement and 1.272 expansion of this entire trading range. Now this is just the beginning of the week, but we have already seen some weakness come into the market. So by the end of the week, we'll see how the week will close. But if the market begins to get weaker from here, there is a chance that we might have seen a pretty important high in the dollar. US dollar, and I will guide you further, but 105 is going to be the key level to watch. Getting below that would increase the chances of further weakness. Now for some sort of a top, we have to wait and see whether we get a top like this, where it's gonna be some distribution that comes into the market. This has been a pretty strong move. We were actually very lucky because this is the entire move we had forecasted, and then the market was able to move higher. The other possibility is that we get a move like this. Let me actually try to blow it up. Here we go, where we begin to get strong moves like this, and then a continuation to the downside. Now let's move down to the daily chart. This is the price action for today, and what we had been waiting for is actually for this price pattern. There is still a chance that we could actually hit these levels exactly, like 109.68, maybe a little bit higher. But if the price begins to close below the 107 or the 20-day moving average, in other words, then I believe that would indicate the shorter time frame momentum is turning to the downside, and we can see the market actually pull back lower. It came very close to the 20-day moving average today, but you can see that today it lost about minus 0.61 percentage points. So we'll just keep on watching this, but there is still a chance the dollar could actually strengthen, and we could get a completion of this pattern. So we'll be just watching this really carefully. Now let's take a look at the treasury market. So we'll move on to the 2-year treasury note. Here we go. Let me actually make it like this, and what we are seeing is actually a trading range in the 2-year treasury note. This is what we're expecting for the market to get into. There was a slight possibility of 0.618%, the 61.8% Fibonacci retracement to be hit around 4.46%. But now the chances are less, because I think we are in this trading range. This could actually be a double top in the yields, and we could see the yields actually move lower in the 2-year treasury note. It is just hanging in by the 20-day moving average. So there we go, and here what we are gonna do is actually move to the 10-year treasury note. I just spotted there's a possibility of a head and shoulder pattern, but I do think the yields are actually likely to move lower, and the key will be this low of, let me actually try moving this this one here. So let's say 4.08. If it is broken to the downside, we can see further continuation to the downside. Okay, now let's take a look at the TNX, which is the 10-year treasury note yields. And you can see on the longer end of the curve, the yields actually rose today. Where we are here, there's a possibility we might see some sort of trading range behavior and then the yields pull back. That is a possibility. So we'll just keep on watching this. And on the 10-year treasury note futures, here we go. And on the 10-year treasury note futures, here we go. Similar kind of behavior but in reverse. So 1.272 is this 108.06 level is really key. The chances are that actually, you know, here the yields are rising. As long as it's held, there is still a chance that we might actually see trading range behavior for some time. But look, it's a really bearish chart, so yields do seem to be moving higher. This 108.06 is kind of stopping that. Now let's take a look at the longer end of the curve. So this is going to be the long bond futures. Here we go. So the long bond futures, look, it's just it's really bearish. This is the point C we had coming in from 25th of April 2024, and here it is actually trying to move below that. So the low was 112 and 27 seconds, and today the low was 112 and 26 seconds. So it's actually started a new trend to the downside. So it looks like the treasury bonds are the yields are rising on the longer end of the curve. So this is really interesting because, you know, the Fed can only influence, or usually the markets after the Fed cut influence the shorter end of the curves. This is why we have seen the yields being kind of, you know, range bound on the 2-year treasury note. But when you begin to move to the 10-year, which is one of the biggest markets in the futures, and also towards the longer end of the curve, the long bond futures, this is what we see here. The yields are rising. Now let's take a look at the gold market. So the gold market is stuck in a trading range. Seasonally, it is usually a bullish. It is bullish months, especially December and the early part of January. But we are seeing pressure in this market. Look at this is the COMEX gold. This is not the spot gold. We'll also take a look at the spot gold. Ever since it's completed this pattern, the chances are we are actually in this orange ABCD to the downside, around 2500. You know, that is the kind of region it could target. Weekly chart. So of course, if it begins to take out these lows, then we could see 2450. This is a symmetry coming in on 2350. And this is the longer term monthly chart. So for 2 consecutive months we have had bearish closes on monthly basis right here. So what we are looking at is, okay, this is let me make it the normal chart. Okay, look, the long-term gold long-term trend line is still intact, but it hit really key ABCD patterns that we like to watch around the 2750 and 2800 mark. So this has increased the odds that gold is actually in a corrective mode. It could be something like this, and we could target 2350, but on the shorter end of the shorter term charts like the daily, we have the other smaller targets as well, which is around the 2500 mark. So let's keep on watching this, and if I show you this on the spot gold, because the pattern is slightly different on the spot gold. You see on the COMEX gold, this one is a little bit higher here, but this one is a double topping right here. So it might be forming this kind of a top right here, and technically speaking, I think we are right at the or we are very close to the 61.8% retracement, and we have a little ABCD there as well. So the gold was under pressure today, and later on in the session, you know, some buying came in. But look, the momentum is also turning negative because the price is below the 20-day moving average, is below now the 89-day moving average. So I think the momentum is turning to the negative side for gold. And it begins to look like this might have been a head and shoulder pattern. There is a pretty good symmetry in there. I always try to look for symmetry. So this is the head, excuse me, this is the left shoulder, head and the right shoulder. So we'll just keep on watching if this neckline, I've not drawn it like this, is broken. We could see a sharper move to the downside in gold by the looks of it. Now let's take a look at the silver. So this is the comics silver. Here we go. Here we go in comic silver. So silver did something a little bit different. You can see there's a lot of volatility in the silver market today, and it actually closed higher, whereas gold has actually closed lower. Silver is really volatile now, and now it's got a pattern which is like this, which is this trend line you can see, and then you can also draw a something like this. So it's gonna be a triangle or pennant, sort of a pattern formation. Now, one of the things with these triangles, which I like to call dynamite triangles, is when they break out, the breakout is rather violent. It'll just then continue in that direction, where it's going to be the downside or the upside. So here we had a little bit of a ABCD, but before that, let's actually take a look at the let's take a look at this. Yep, so it went right to the 38.2% retracement. Here we go. And then if we just draw it like this, and it's a little bit higher. Okay, so that is very, very interesting to watch silver, because there is some strength coming into this market, whereas the gold did not perform as well. Overall, I think it still look a little bearish, but let's see if this trend line will hold for silver market. Now we'll move on to the equity market. So let's start by taking a look at the German DAX, how it did today. So German DAX had a pretty strong move to the upside. This is just the symmetry, just to show you the symmetry right here. And because of this symmetry, we were calling in a pretty important low right at the 50% retracement. Getting above the 20-day moving average is pretty good. Now let's take a look at the FTSE. This is the daily chart for the UK market, FTSE 100, and here we go. You can see it's really range bound. So what can we say about this market? Bottom of the range, now it's moving towards the top of the range. Now let's take a look at the US equity markets. We'll start by taking a look at the S&P 500 cash market. So you can see the cash had a pretty good session. The futures were actually doing really well, and this opened up with a gap formation where it went right to the 20-day moving average, and it actually closed lower. So there is some sell pressure still in the market. So let's take a look at, here we go. Yeah, I think the 78.6% is a little bit higher. This is the 61.8% retracement, and there we go. Now if we just take a look at this on the weekly chart, but the week has just started, still in this range bound fashion right here, but you can see that the market has been actually last week closed positive for the week. Now one of the key patterns that I would just like to mention is 20th of December, we were I did a video. I'll put a link to it towards the end of this video for it. Please do watch. The markets were making harmonic lows, all major markets that we like to follow, and the biggest one was the Dow Jones Industrial. So here we go. It has actually formed a 38.2% retracement held 2 times, and then we have seen a move higher. Now whether it's able to go and make new all-time highs, the chances are, as long as this 38 or this double bottom is held, I think the momentum needs to get a little bit better. Then it's likely to go and actually probably make new all-time highs. So just watching this one now. I don't have any targets at the moment. I'm not putting it on the charts. Waiting for this momentum to get better. Now let's take a look at the ES, because that's going to be the S&P 500 futures. And on the futures, you can see slightly different kind of candle formation, but still right at the 20-day moving average. If it gets above this, that's going to be good for the momentum side of things, and then I think a move towards to make new all-time highs will clear up. Again, the 38.2% retracement was respected with this double bottom. Now, the interesting thing on the 2nd of Jan low was the S&P 500 cash had actually taken out the lows of 20th of December, but the price rejected lower prices. And what we have here is basically this market actually did not take the lows of the 20th of December. So that's an interesting observation to be made here. Now, let's move on to the Dow Jones E-mini. So Dow Jones is really important in my opinion, and actually this chart is the key for this market to move in my work and in my opinion. And the reason is because right here where the market actually made the double bottom, and on 2nd of Jan it also took the lows out by a little bit on the 20th of December. And here this is actually, you know, a confluence of so many ratios coming together. We have the 38.2% retracement, we have the 50% retracement, 78.6% retracement, 1.27 to expansion Fibonacci coming in here. Then we also had this market symmetry. There you go. So this is pretty much the entire decline of the bottom of the 5th of August. Not exactly hit, but came pretty close to that. So the video, I'll put a link towards the end of this video. Please do watch that. In that I actually explain the day it's happening, which is this the 20th of December, and we did this together. So I showed this on live. So it's gonna be a really good educational video for you guys to learn the methodology that I like to use, which is the harmonics. Now let's take a look at the NQ. So this is NASDAQ 100 futures, and you can see that pretty strong close for this one. Just for a quick second, actually, let's take a look at how it closed on the cash market. So you can see that some selling came into the cash market, but it still closed above the 20-day period moving average. So the momentum looks strong. The chances are it is gonna go and actually make new all-time highs. I think it is setting up for that. This market has been stronger than the S&P 500. It's definitely been much stronger than the Dow Jones Industrial. So that the momentum looks good. Now, I think if we are able to get one more positive day, that's going to be pretty good. This is what we are looking at in NASDAQ 100 futures chart. Now, let's take a look at the Russell. So this is Russell. Now the Russell is presenting a slightly different, slightly different kind of a picture. And here, what we have is this. What do you call? Let me make it to the right hand side. It found resistance right from the 38.2% retracement. But as long as this low is held, because we have this harmonic 50%, 61.8%, 1.2, it's pretty strong support in the double bottom here. The chances are it's still likely to move higher. And if it's able to get above this 38.2% retracement, above 23.13, 23.15, I think that is going to be a pretty good foundation set for higher prices for this index. So interesting one to watch. And then we'll also take a look at the cash market for it. All the cash markets got sold off. The momentum needs to increase to get better a little bit if it gets above the 20-day moving average. Now let's actually take a look at the NYA. which is the New York Stock Exchange Composite Index. Okay, so the NYA has done a really interesting pattern formation, right? So first it's at pretty strong support coming in from 50% and 1.272 expansion, very similar to the Dow kind of pattern formation, but I've not drawn all the fib support there, and it has done pretty much this ABCD formation. So it's a pretty strong resistance level, 19,432, right at the 20-day moving average. But if the market is able to close above this, especially on 2 consecutive bases, look how bearish this move has been. It's one of the bearish looking charts, just like the Dow Jones Industrial. It's gonna be really good if it is able to get above the 19,430. The momentum will begin to look positive because the price will move above the 20-day moving average, and then of course it would have cleared the 38.2% retracement, which works really well in strong trending markets, the 50%, 38.2%, and then of course it had this ABCD here as well. So that is actually really important and key chart to watch. And if it's able to close higher than 19,000, that's gonna be fantastic for the equity markets to put in higher prices, and maybe some indices make new all-time highs. So thank you for watching the video. This is what we are looking at, the key markets in the United States, and also some equity markets in Europe. If you happen to like our video, we do the technical analysis here using pattern recognition and Fibonacci retracement, then please do subscribe to the channel. And if you do, then hit the bell icon button. That way you will know when the new videos are posted and you will not miss any new videos. And if you learned something from this video, then please do hit the like button. I personally will really appreciate that. It really tells me that people find my videos educational and they are able to learn something out of it. So thank you very much for your time, for watching the video. Good luck, good trading, and speak to you guys soon.